Friends, on behalf of Higher Education Forum, on behalf of ISTD Navi Mumbai, ISTD Islampur, SIS LLD, and other associated institutions, we extend a very hearty welcome to all of you for the exciting talk in store for all of us. And the topic is very interesting and relevant as of today, and that's the future of one of the most important and interesting sectors in the country, and that is the BFSI sector, banking and financial services sector. As you know, friends, that the banking and financial sector in India particularly has grown manyfold. And if we talk about statistics, possible it has gone more than 20% of CAGR. It is standing in an astounding figure of about 90 trillion Indian rupees as of now in terms of the market capitalization. And it is one sector that is seeing a lot of changes, a lot of transformation, the customer expectation, digitizations, artificial intelligence, and so on and so forth. So we thought that we'll have an intellectual deliberations and interactive session with on this particular topic, and we cannot have a better person than the gentleman we had, Dr. Narendra Mairpady. Dr. Narendra Mairpady, the former chairman of Indian Overseas Bank. So we, on express of all of us, we express our gratitude to sir that he is kind enough to be with us today.
I'm
And
grateful.
thank you very much, sir. And before we take the session forward, may I request one of my senior colleagues from Higher Education Forum, Mr. Kannan, who is also an ex-banker from ICICI Bank. Kannan, you can formally introduce sir, and then we can take it forward.
Yeah, good evening to all of you. I am very, very happy to introduce Dr. Narendra Mairpady, and he is a chairman of a few companies today, and he is on the board of several companies as independent director, including IPCA Laboratories, etc. Until recently, he was the independent director on the board of the leading company in the Adani Group, Adani Enterprises. And he retired from Indian Overseas Bank as a chairman and managing director. And before that, he has worked in Bank of India, Corporation Bank, and Housing Finance Corporation at a senior level. He has received several reputable awards. All of us know about Coach Award. So in the year 2011, he got the Financial Inclusion Award from Coach, and also he got the Lokmat BFSI Awards for Best Bank in the public sector, and he has received a few Lifetime Achievement Awards, including award from IBA Banking Technology for the best use of business intelligence, and many other awards for his excellence. He himself is a Doctor of Letters. He has received his doctorates from Hindustan University, Chennai, and Kalpagam University, Coimbatore. And in his degree and post-graduation, he passed out with the top ranks in the Mysore University, and he is a CIIB Institute of Banking and Finance. He is passed from Mumbai. Right now, he is the chairman of Banking Committee of Indian Merchants of Chamber. Apart from that, Dr. Narendra, he has a lot of personal interest in human development as well as training. So with that in view, he is associated with enterprise called NCube Collaborations, through which he is conducting a lot of seminars oriented towards knowledge, especially in the areas of banking, finance, and human resource development. I am very, very happy to introduce him. And my initial mentor when I came to Mumbai was Dr. Sen Gupta. And after I retired, I took a lot of guidance from Dr. Narendra. So I'm happy to have both of them today and joining them today. And we will invite Dr. Narendra to go and give his speech. Thank you, sir.
Thank you. Thank you. So at the outset, I am very much grateful, and my gratitude to Professor A.K. Sen Gupta and the type of spirit with which he is pursuing his mission of imparting knowledge and also in getting all the stakeholders together. It is very much highly appreciative and pursuing in the sense, even I was told recently also, even for the trainers, what could be that and what are the opportunities and all that type of various activities he is doing. And I am really proud of his achievements and his contribution. And I also see all the participants here, they're all in the similar manner achieved distinction and recognition. And with their participation, the quality of discussion and the support which they are extending to Swain Gupta has been highly appreciated. And as far as R. Kannan, I've been seeing is a man of such a great talent and knowledge and connectivity. And today he has been writing a lot of suggestion to not only Indian government and even at the international level, and even some of the heads of the state in other countries, and it is all being acknowledged. Recently met our cabinet secretary and other minister also, and he has been invited by them. So it all shows I am in the midst of people who are all very active. And today I deem it opportunity and my privilege to address. And as Professor Sen Gupta ji has mentioned, the banking sector is the liver of economic development. And today, in the current scenario, the Indian banking sector and including NBFC, they are in a very financial what you call stability and strength. And they have achieved in the last maybe 5 to
Sir, you're muted, sir. Yeah.
Kocha, you know you could not hear up to now.
No. We could hear just 30 seconds before it was muted. Please go ahead.
Okay. So in the current scenario, in all terms of whether in terms of return on asset, return on equity, or whether in terms of what you call provision coverage ratio, in terms of gross NPA, net NPA, or in terms of the capital adequacy ratio, uh, all the public sector bank, foreign banks, new generation banks, and the other old private sector banks and the other NBFCs, they are doing extremely well. And they are poised for taking the futuristic their role actively in the journey of India towards Vikasit Bharat. In fact, the recent financial stability report has also given that whether it is in a base scenario or in a extreme case scenario, particularly in the context of current global headwinds, or in terms of the geopolitical tensions, or in terms of the recent policy of the USA, where of course Indian government has been doing extremely well in terms of the FTA agreements, both with Europe and UK, and of course other country like Australia and all. And now they are in the job of with the USA, which is very relevant and very much required. Even in those circumstances, our capital adequacy has been very good, and tier 1 capital and tier 2 capital both are adequate, and it can withstand such what you call any scenario of the overall, like world. The growth rate has been coming down almost 100 basis points. And whereas of course India, it was growing in a growth rate of around 8.5, and now we are in the revised growth rate of 6.3 or 4. And Reserve Bank has also recently reduced that earlier estimation of 6.8. So that one, of course, the overall economic growth. Uh, but in spite of that, we are the fastest growing, and we are in the third largest economy, and we are likely to even maybe today the fourth or fifth, but we'll be reaching or overtaking other country like UK or Japan also. So that is the story. So in the Vikasit Bharat, when we are achieving 30 trillion US dollar economy, then the banking sector has to play a very important role. Recently, our finance secretary also mentioned that currently our credit to GDP, which is the one parameter, how we are, the banks are able to take up in terms of incremental investment towards our expansion, capex expansion, or in terms of the commercial credit for various trade and other things. So there we are around, in spite of all that, we may be nearing around 55 to 58. Whereas globally, the credit to GDP has been more than 100. Some of them even maybe 130 or 160. So our finance secretary said that by 2000, what you call 47, we must be above 100 and maybe 110%. So you could see the gap in terms of the opportunity and the capabilities of the bank in seeing that today they have strengthened their risk management. They have strengthened their risk monitoring and particularly credit and investment assets monitoring. And they have also adopted all the latest technologies, emerging technologies, so as to be prepared in terms of the futuristic role. And there, of course, one currently the banking sector is facing one structural issue in terms of, the mutual fund industry has grown substantially, say from 25 lakh crores, today it is 72 lakh crores. And substantial growth. All of us here also, most of us are now also in your planning of investment, you are also taking the role into mutual fund. Now, of course, recent some of the campaigns of the mutual fund industry that resulted in a substantial growth, and particularly during COVID, the fact happened that the Reserve Bank had to give a substantial liquidity support around 12 lakh crores. They had to also bring down the interest rate substantially. It came to around 4%. And that time, that was giving a negative return because the average inflation was 6.5%, whereas the bank's rate of interest were very low. And in that scenario, I could critically say that the banks were not encouraging in terms of taking more resources, because that time the credit was lagging the resource mobilization and credit were not growing. It is a fact because the lockdown and other things. And that period, people started moving to the equity and mutual fund route. And the number of demat accounts also substantially increased during that period. And the retail people, means all these retail personnel, started taking interest in the equity or debt market. Whereas the money raised by the corporate during that period of low interest, they all paid back the credit also. So in overall that, and they could assess the market, and they could get the around 9 lakh crores that time at a very cheaper price. And that resulted in corporate also deleveraging. They leveraged too much. So this period of shifting from resources for the bank to the other route of investment resulted in currently the banks are facing lower credit deposit growth, and whereas their deposit to credit ratio, that is called CD ratio, that is already more than 81%. So that is the where the Reserve Bank has been giving extra liquidity support. Recently, they gave around almost again 9.5 lakhs, and they also recently reduced the CR also by 100 basis points, which is coming in September to October. So that gives around another 2.5 lakh crore. Because to see that our busy season credits are met through the proper resource. And other side, Reserve Bank started recently reducing the repo rate, and the repo rate has been now reduced almost 100 basis points. Now, in this scenario, the CASA deposit, which used to be always one of the main source for cost-free deposits and also cost-less deposits, that is current account, no interest, and savings, there will be interest. And one notable point that all of us who are retired people should know, the savings rate used to be almost average 3.5, 4 earlier. Today it has been reduced to 2.5. So this also is a challenge for the bank, because other side they have to pass on the best rate to the corporate, and also of course retail, wherever there are, it is linked to the market rate. Those part of the lending rate has to be immediately in line with the market rate, which has been showing slowly reduction. Now, even though of course 10-year and yield and all has not come down so much, but there is a impact of repo rate cut on the market. So this reduction, because the corporates are, even today corporate sector in the banking lending has been coming down. When it was around 65 plus 70%, today it may be less than 35 or less than that. Whereas the retail lending and the micro and small industries lending and agriculture lending, that percentage has gone up, and that is the major source of now lending growth for them. And the other side, of course, you have heard a finance minister also saying that the capex which government is for front runner in doing this year 11.5 lakh crores, whereas parallelly, in spite of the benefit given to corporate by taxation reduction and all, they are not coming with the much capex. Of course, capex is there in the new sector like alternative energy or any other sunrising industry, but it is not up to the mark, which recently our Nirmal Sitharaman madam mentioned. So that another is, of course, the capacity utilization would have come to 72, 77%, but unless it is 80, 85% above, new expansion don't take place. So this scenario has resulted in the credit growth, which were earlier maybe 20, 25%. Today it is hardly around 10% or 11%. So over a period of full year, this has come down. And the deposit growth in the recent days, again, deposit growth has slightly improved, but they are, because they have contracted, all of us also benefited when the bank got all long-term deposit and they gave a best rate. And it may be some places it is 8 plus also. Now these deposits will not mature now. And that cost of the deposit, say 446 days or long term, that will continue. And so that interest rate reduction transmission is taking time, and it is not up to the mark. So whereas, so the margin, of course, in the internationally banks are used to operate in a lower margin because they have access to a lot of non-interest income. And their fees is, their most focus is on not asset creation. In the sense, lending as a is not most important. They provide a lot of service, and in those, whether it is a, of course, in terms of forex or in other area like local, some of the risk management product and or risk hedging product, they get the long. Other than, of course, includes in Indian context, selling insurance product, mutual fund products, or other services, they get the income, non-interest. And that part of that and all, the margin there may be 2.5%, but Indian context, we are used to 4 and 3.5%. Now that is under pressure. So this situation, I feel that the banks have to provide a lot of value proposition and customer centric, such newer product, newer engagement, and ensure that the personal touch along with the technological gadgets which are already there. So where the younger generation and others, and including all of us, are also now today with the focus of digital banking, internet banking, mobile banking, and the penetration of the what you call these in the Indian currently is very high. So that we call as JAM. That is the Jandan Yojana, mobile and Aadhaar. So Aadhaar and mobile, JAM Trinity, that has helped the bank, whether in any sector, not today, even the rural sector have started, and the smart banking, and some of the RBI has also enabled not only on the smartphone, even in the general phone, that could be done UPI. So the UPI growth has been very substantial, and whether in transaction and volume, UPI has been a game changer. And we have now a situation where the regulator is selling the UPI model to our neighboring, means some of the countries where they are going to introduce that. So with that is also a very, very, very positive news. Apart from that, the Reserve Bank of India also came with the central bank digital currency. So with the central bank digital currency for wholesale payment as well as retail payment, all banks are now in the trial stage. So the our one side digital payment model through UPI and other even private sector like foreign also, but with the certain conditions that they have to store all their data in India only. That enabling today Google or Samsung or any other model of payment products, they are doing well, along with, of course, payment banks. That has resulted in and substantial improvement in UPI. So this UPI is on a stack. It is called public digital infrastructure. You must be knowing that public digital infrastructure was a major discussion in G20 also. And India became a model on this public private digital infrastructure, and that is being now negotiated. Along with that, the central bank digital currency, which is currently for enabling that our cash transaction, which were the factor in demonetization, and we were to bring down the what you call this amount of cash in circulation as a percentage of GDP, maybe 12% or 13%, it should be brought down. But over a period of time, the GDP has also grown. We are maybe nearing around 4 trillion US dollar economy. So the cash in circulation also has gone up. So the percentage per GDP also is not shown that much reduction. So the whole endeavor of the Reserve Bank is you need to change from that. Whereas UPI per se has become a major part of the digital payment infrastructure, through the wallet mode in the central bank digital currency, the cash in holding and cash is being used for all our petty payments. That has to come down. Moreover, the Reserve Bank wants that when we are doing a cross-border transfer and cross-border remittances, these countries should recognize Indian central bank digital currency as the what you call in terms of the payment mechanism, and with the suitable arrangement, it will result in our central bank digital currency being made of the mode of payment in international, whether in private remittance or in the your forex and other exports, imports, and all. So that is the endeavor of the Reserve Bank, which we are in a way seeing the growth sign, and the RBI is taking action. So in terms of that, what I was telling, that Indian banks will have to improve the franchise value of our customers, and customers, irrespective of all that, their engagement with the various innovative product, and the products cannot be what you call me too or in a time. It has to be different to different sector, and there the current emerging technology like artificial intelligence, machine learning, and also maybe in terms of the quantum technology, your computerization, or in terms of the cloud computing, in all that, they have to go into the analytics. Like, State Bank of India have done that their own YONO, and it's a very big achievement. And Bank of Baroda did the Bank Bob World. So in this way, they are covering, and their ability to give and expand the customer base has gone substantially. Of course, the financial inclusion, which we were talking earlier, that the index recently, RBI also seen that we are slowly moving up and around 65, or that is the index, financial inclusion index. Now there is an opportunity for the bank, these Jan account holder, and maybe in the other scheme like our what you call Mudra loan, or Vishwakarma loan, or loan for women sector, all that we should be able to convert those connection of customer into their empowerment, and through the getting them into the various mode of self-employment, like the success of self-help group, particularly in South India, has been very great. And there, whatever we have learned, particularly women have led the self-help group, the recovery has been substantial, and there has been no much what you call NPA there. So similarly, if access to the credit is also very important, and empowering them through self-employment, or self-help enterprises, and covering them in terms of the growth. And that's why recently the Prime Minister's this Mudra loan, the amount in terms of that has also been increased. And during COVID, government came with a lot of guarantee scheme, particularly for MSME sector, where 100% guarantee they have brought in. And today, recently, they have brought 100 crores composite credit, where whether it is term loan or working capital, can be given through that 100% guarantee. So the collateral based lending, which was the major focus earlier, now that has been focused along with that cash flow lending, because every person under that guarantee scheme, there were hesitation at the field level. Sometimes now our mindset on collateral, we were not able to ensure that the branch level there is a response to that. Today, that has been slowly changed. Of course, the coverage of that earlier, it was say one crore. Today, that coverage has been increased to 10 crores under our Prime Minister's leadership. So these various thematic lending also gets into the mode of outreach, and those who are unreached, they become reached. So that is where the requirement currently being done through technology. And here, the fintechs are our collaborator. And earlier, no fintech, was always a feeling fintechs may come and take over all that. Today, they are being seen as the collaborator, and the government, of course, RBI particularly, has brought certain concepts of SRO, that is self-regulatory organization, so that whether the fintechs or other technological based companies, they have to see that they provide the wherewithal along with the bank, they become the relationship customer, and their services are being rendered. But they cannot say that we are also a licensed organization to go beyond the regulated entity. There, some of the what you call pitfalls that has been now also means curbed through the recent guidelines on digital lending, because we found quite a lot of apps and organization, maybe even 600 700 such digital lending fintechs, they were not following the guidelines of the Reserve Bank. And even in P2 lending, there were some pitfalls. Now all these are being, so one area is for the bank is, one of the important thing is you adapt your technology in such a way, these technology related fintechs becomes your collaborator. Second is, of course, that regulatory compliance has become a very, very, very important. So the artificial intelligence or such newer technology will have to be leveraged for getting the regulatory agility, and we have to take them, because today it may not be physically possible in terms of monitoring the regulatory issues coming, for which actually bank, wherever I am director in the private corporate, now I am asking them, I may not accept your physical certification of what you call compliance. We need to get through the what you call automatic technology, and those technology will list out all the tasks, and it will give the confirmation only when the tasks are complete. Similar thing is to be taken in the bank, and I find even NBFCs are adopting such latest technology, and human factor. Today, you recently saw that such a TCS company is removing 12,000 people. Now that there is a need for adapting to the newer technology, and the people cannot say artificial intelligence or this type of all that. They are not going to study or become fully knowledgeable. So without that, that's why banks are also taking specialized people in this type of areas. State Bank is taken a lot of people for analytics, and because through artificial intelligence you can study the customer totality. Apart from that, today, apart from what is the data available in the banking through, of course, aggregator also has come. With all that, we are also depending on the other than that data which are available maybe in elsewhere. Through artificial intelligence, you can even study the behavioral pattern of the customers, and what are their choices, how do they do their day-to-day business proposition, and from such information you can arrive at the rating pattern of the customer over and above the internal rating which we do through the aggregator model. So in that way, all these technologies are coming handy in arriving at the whether these are all investment grade or whether lendable viabilities wise, how are they able to qualify accordingly. So this I have known a company called our DigiLI. So that man now he has been doing this particular behavioral thing, and he is helping the for our banks in giving finance to the micro and small enterprise. So the today's inclusive growth and financial inclusion has to get a new momentum through this adoption of technology. So the bank is come up that all of us are may say whether physical branch is required or only digital banking. Now, in this, I think our bank, particularly some public sector bank, for some time, no, they remained means restrictive in a branch expansion. Whereas at the same time, the private sector bank expanded, particularly like HDFC, Axis, or ICICI Bank. They had a yearly 400, 500 branches expansion. Now, what they feel is, in spite of they are also well versed in technology, but why they, even including Kotak and all, but why they expand? Because these physical branch increases the franchise value, the brand value, and the safety and security also of ours will be known to the people by seeing the bank every day. And for some the rural and other sectors, still out of 5 lakh villages, still 2.5 lakh villages may not have been covered through the physical branch. So that is where today again I find that the public sector bank started seeing that they will also have a physical branches. So the whole idea of the RBI also that earlier, of course, they said that with the mode of ATM or through the your wherever customer service center of the government is there through the digital banking or in any of the point of sale terminal and other things, through of course these entries are all covered through the banking services. But that is where you need to be little low cost such outlet that will add, and which is currently they are doing. And parallelly, of course, that the human resources, maybe whatever around 10 lakh million or our branch staff, that is a source of strength as well as need to be again relearning or retraining towards the newer methodology of technology, newer products, and newer areas of banking and risk management, or in terms of our treasury, or in terms of the what you call balance sheet management, or some specialized or the forex, international trade. These are the areas where we need specialized people, so that the capability of the bank in terms of the newer segment particularly like, now Reserve Bank, the one area currently, another important area coming is climate change and sustainability. Now, India, our Prime Minister has already given that we will have to achieve net zero by 2070. And by 2030, they were to give around 50%, 45% by the alternative energy. Now, we are glad to say that already now, as on date, 50% plus we have achieved through alternative energy. Of course, in the growth, we are still not reached the peak in terms of the fossil fuels and maybe coal and all. So the whole thing here, the Reserve Bank governor also said the banks have to improve their capability to understand where are the green emission, gas emission, and what are the your what you call adoption measures and mitigation measures taken by the banks, and such of the risk prevalent in the current portfolio, and what can be the financing the newer such green project, how they would enhance their capability to know that in well, and with that you would be able to see that you are taking care of the climate change. Currently also they have asked them to have a disclosure that is whether on a base scenery as well as enhanced base scenery. The board level also through metrics where all of them listed already. You have to give your business responsibility and social responsibility metrics. Now that will become as the final circular, and the bank also may be asked to allocate capital adequacy for the such climate risk. So in this area of ESG or the climate related what you call green bond or sustainability linked loans, all these India banks also have to play very important. One side they have to raise such green bonds or green such no, like you are all aware. I don't know how many of you have given deposit. The Reserve Bank has asked banks to take green deposit, and the whole idea is the green deposit will have a lower rate because we are all people. So we should be able to give lower rate such deposit to the bank, and bank should generate green assets separately out of this green deposit. So this is the another which is picking up. So over and above that, they have to slowly, and whenever such projects come, now corporates have to give a separate what we call their understanding that what they have done in terms of all these measures currently at what level of C0, C2, or what you call C3 emission level, carbon emission, the tax. So the another government has also given a framework for taxonomy. So these are all the new concepts when it's coming in the bank. We need our people to be elevated to that level of knowledge, which is a continuous, as earlier Kannan said. The learning and development division in the bank is a very important, and apart from the leadership development and bringing the mid-level management in the senior manager management level and readying for them for future leadership as a future ready leaders, they need to adopt the newer areas of learning, which is a big task for the bank. So I think a few areas, of course, I have covered, and now it is 7:41. So I am very happy, sir. This is my little extempore speech where I find what could be the newer, but at the same time, our Indian banks are well, what you call, uh, well, must robust and strength, and they are having very much. Some of the banks are even 100, nearly 85, 90% provision coverage, and of course, in the recovery, there are a few cases they have provided also, maybe around 12 lakhs crores of bad debt they have provided, means they have written off, but it's only a taxation measures, whereas they would be able to recover it on their own. So friends, now whatever, if there are any questions, I am glad to reply, sir.
I think,
Chandan?
Dr. Narendra, that was an exciting and insightful talk. Now we go for a question answer session. Members can unmute and ask the question, please.
Sir,
Yeah, sir.
I have a question. I don't
Yes,
have
sir.
much of a
Yes, sir.
financial or banking background, but as a senior citizen, I would like to know what technologies you are planning to use to reduce the frauds, particularly of the senior citizens. Thank you, sir.
Recently also RBI report came, or in the parliament they provided the data that in spite of all that, the your which I also could not cover, that the fraud has gone up. So one fraud is the major risk for the bank is cyber security and digital related fraud taking place on the bank. And of course, there is also data breach and phishing and other attacks on the bank, which currently banks are all gearing upon cyber security. And of course, the parallelly, the loan related fraud were very much high during a certain time. And some of the, you are all aware, some of the big accounts went into problem, and they were through the insolvency bankruptcy laws. They were all some of the bigger accounts which RBI notified. They were all in the different stage and some good recovery. That percentage used to be sometime very high. Today it may be averaging around 35% of the accepted claim. Balance are all, some of those are also went for liquidation. Whereas that methodology are the new guideline again is going to the parliament for improve the insolvency bankruptcy laws, so that because it is where creditors are in possession of the company. So that is a very good methodology. And even in the MSME, there is a where debtors are in possession, but there will be a settlement proposal, which is the 90 days, and you do it. And if the bank is satisfied, file with the NCLT. So that is a pre-package resolution for MSME. Your point was, particularly all of us individual during COVID, no, we all also had such a cyber attack in terms of our fraud relating to your credit card, debit card, and even in social media, in everywhere, it is a risk factor. And in the recent thing, you are hearing digital arrest and people, and the amount of money lost also. Even a big learned people also, industrialist, one case was there. He lost 7.5 crores, but luckily later he could get back. So your point is the Reserve Bank has told that you have to generate more awareness, and you have to also have a robust system. And today RBI is starting using technology, particularly artificial intelligence, to arrive at predictive such fraud. Now particularly this what you call mail account, what do you call that, accounts where there is no balance or nothing, where we are opened, or some people are all opening so many accounts only purpose of using this, so that such accounts have been become a risk. And there is also a risk classification of accounts. So we have to provide which are very high sensitive or very critical accounts, where are certain accounts which are low sensitive or medium size. And all these accounts are from the KYC point or from the other point, they are trying to strengthen and monitor. So the bank is doing, but finally sometimes it happens that no, we were not prompt in reporting, or we were not prompt in taking preventive measures. The responsibility of giving that money to the customer, sometimes they escape also. So as you are rightly said, as individuals holding our bank account, you have to constantly check. Like I'm telling you, even fixed deposits, all of them, we cannot take for granted. Take continuous confirmation, because even some of the employees related frauds are coming very high. Apart from the externals, internally also you cannot, because the people are taken from different states and all. Sometimes they tend to become in that. So of course these risks are there in any organization, even in a private corporate. But from our point of view, we have to very careful, particularly the password management or continuously changing that. Even similarly in the ATM handling that also, we have to not to keep our that anywhere sign of that. And even because some people even observe what we are doing and then they may play also. So that is a big risk, and that money lost by the bank is also very high, and parallelly some customers are also losing. And I would say that we have to little more be aware of that. And the bank also should be little customer oriented in educating them and giving them fair view of that in all their customer conference or anywhere, and also preparing the staff to take enough measures to avoid such what you call vulnerability to the fraud. Yes.
Thank you, sir.
Yes, sir.
Next,
Can I ask a question?
please
Yeah,
go
yeah.
ahead.
This is Hema. So I would like to ask a question. I hope it is within the scope. It is following what they talked about senior. I have
Yeah.
a question to ask. Today, it so happened that today only I read about the medical problem of youngsters. So what is happening is the loan that is being given, even for a secured loan, say for example a house, to buy a house. Now the secured loan also has got a age limit, and also it is told. I talked to the bankers, and they told me that the mortality will be there. I think this criteria today in today's situation is not absolutely right. So you can even have a medical checkup, and then if the old people have got a capacity to buy, I think loan should be given to them, mortgage loan, so that they can buy a house, because that is the biggest problem. Our founder member knows very well. He was writing about the seniors, what are all being done. I'm talking about what is not being done.
So I could little understand that you are saying that the young generation also our they are all sometimes are prone to the health issues. That's what you are talking, madam.
No, no. So health cannot be, mortality cannot be taken as a criteria related to the age, and therefore the loan is denied even for a secured loan, secured asset. House is an asset. If the person dies, you take the house. It is as simple as all that. But they don't give a loan. So many loans they are given. Housing loan they don't give. Why?
Okay, okay, I understood. We are also, all of us are facing that. What you are feeling is the at a certain age, of course, that, but in a way, we are all likely to cover our key man insurance. And abhi in all houses, no, there is a karta. The kartas are also being covered through the loan, means in terms of the insurance. In housing loan, of course, the people who are little in the higher age, then your repayment period will be lesser. And the secured loan per se is very safe for the bank. And the bank has to be little more positive in looking at requirements. And the overall average of Indian people also today, with the good health facilities available, it is around 85 and plus. So only a few portion of the people, if they have not taken in the younger days or whenever they, or even today, they don't take proper care of fitness, it is likely to get into little difficulty. So the bank has to see what is the earning capacity of the little aged people, from wherever all they are getting their overall cash flow, and whether they are after seeing for various their own personal requirements, health ke liye bhi also all of you will be having a medical health policies. If that all being taken, then what is the net take home salary, and after that what is the net remaining as surplus, and whether they are able to repay, or such of them along with the such secured loan, they may also insist for younger generation as the what you call additional co-borrower or guarantor. So the overall it all goes by the what are the, because one more thing has happened now, that banks, no branch does the loan now. All that they have to only do the origination and send that to the credit processing center. There are various, even in Bombay, for a one bank, it may be at least 15, 20 centers. And these centers have the power to sanction. Only maybe a schematic lending, a few cases the branch has. So branch becomes the more of customer, what you call, service oriented, and they become the marketing oriented organization, which new generation banks had adopted now. All the public sector bank also doing that. And they have also got specialized branches which are exclusively for MSME. Some are corporate lending, again in that mid corporate and large corporate. This type of classification has been done on, but the overall power has been given to the such centralized processing, which even takes care of the documentation through digital, and only the loan will be reflected in the branch. So your point is well taken, madam, that we must not go by only age or whatever. There must be other factors will have to be factored. One thing, of course, your point, secured and unsecured, I didn't talk earlier. The Reserve Bank found that the unsecured loans have been going at a faster growth. And of course, recently they were also not happy with the gold loan, even though secured loan, that also went very high growth in the bank. And then loan by the bank to the NBFC also went in very high. In the meantime, that the Reserve Bank brought little restriction, and they increased the risk weight to 125%. But recently, again, the new governor has relaxed that, and the growth rate has been almost half. It is reduced. It sometimes the retail went by even 48%, and the current what you call credit default is mainly taking place. Most are in unsecured loan. So the unsecured loan is easy to grow, but it is also increasing the your probability of default. So that is where the Reserve Bank wants them to little be aware and grow in a measured manner. And even in gold lending, there have been which has to be followed, so that the gold loan also at a moderate growth. Yeah.
We'll take one more question, last question.
Sir,
Yes, sir.
one small remark, sir. Let me finish it, if you permit it.
Please give a time for somebody else, please.
Yeah, yeah.
Sir,
Yeah, please.
what I'm trying to say is, please, you try to think about this. That's all.
Yeah, next
Yeah,
question.
Yeah, wherever the policy level, our Kannan will take care of that, and he will write to, even governor is writing regularly. So he could add these points. If there are really, it is a fact, then he can give his suggestion. Okay.
Any other question? We'll take a last question.
Yes, sir. Yes, sir.
Kannan, you want to ask something?
Yeah, where is our Kannanji? Kannan?
Kannan is there, but
He is there, no?
yeah, he's there. But he is not, we are not able to hear him. Any other question? If there is no other question, then on behalf of all of us, thank you, sir, very, very much for an enlightening talk. We look
Kannan
forward to
has come, sir. Kannan has come on the line. Yes, Kannan, you have anything? Question? No, acha, we are not able to hear you, Kannan.
Sir, we have received one question in chat box. What is the impact of punitive Trump tariffs on the banking system?
Yeah, your question, no, sir, correctly, that the US tariffs, which are unreasonably high as compared to the earlier average, maybe even less than 5%. Today, even now is charging them based at least 10%. And if we are negotiating also, it will not be less than 15%. But whereas certain like steel or other item, whatever metals and other things, he has been going to charge very high. Second, wherever we are now procuring oil, such countries are in the sanction category, where like Prussian oil, which was a major supplier to us. Now the Reserve Bank, these people have said that wherever from that country you are getting, I will charge you very heavy. And because you are not, why should you take the from that country? You take from me. So some of those measures are all aimed at bringing those countries under that negotiating table and have a terms where it will be on a reciprocal, on a equal basis, because the US thought that they are very much taken for granted, and they are having a what you call negative balance in the trade account, whereas all other, like India also has a positive balance in the US, what you call our trade. So this itself is maybe 1.2 trillion or whatever dollars. So they say that this cannot remain. And his policy, no, as such in the current, they got treasury surplus. And of course, it has not got that much impact on the inflation of the US. So people are in the fear, they are still purchasing. And the whole idea of US is that he should bring investment to India. He is forcing, including our various organizations who have put up a lot of electronics and other things in India. And India is a major supplier under the PLI scheme also. It has made a very big progress. But he wants all of them to come and put up there. Otherwise, he will charge very heavy. So this has resulted in Indian exporters. Sometimes it may not be competitive there. And like our UK agreement, that has resulted in our textile getting a little boost, or our gem and jewelry getting a boost. Now, otherwise, they would have become difficult to be competitive there. One area is that Indian all manufacturing exporters will have to focus on efficiency, innovation, technology upgradation, so that they will be cost effective there. See, looking at all government support will not be always a workable proposition, but temporary due to these measures, as well as of course in other country on climate risk, which I mentioned earlier, the export is the major source of our growth. And we, as we depend on domestic growth, we are also parallelly looking at our export led growth. And India, particularly in terms of our what you call forex reserves, or in terms of the fiscal issue, we look for foreign funds to come here, whether through FDI or foreign investment in the our various equity market, as well as by the other professional service export receipts, and in terms of the manufacturing export. So the overall manufacturing as a part of our Indian no growth itself, we want to have 25%, but it is around hovering 15 to 17%, or even once it came down to 13%. So we have to go a long way in productivity improvement, in technological upgradation, in efficiency, all that. Then we can have a better say in the exports in the global markets. Similarly, of course, our supply chain has become a very big problem through the various sanctions and all, and the overall freight cost also has been going up. Plus, there is a physical safety risk also there. Some, no, you must have seen some of the ships are being attacked. So, in overall, this scenario, the Indian manufacturer, they look at government for support, which subsidy, all that. So now government will have a very, what you call, lesser leverage, because there is a WTO also certain guidelines. And otherwise, these countries will go to government, WTO, and put, including USA, has put up their, what you call, objection to certain our area of where we are reimbursing export subsidy, which is, that's why instead of that, we are giving now import subsidy. So that they can reduce even importable goods which are meant for exports can be little cost effective. Yes, sir.
Okay, thank you very much, sir. Then may I now call upon Mr. Emmanuel Joseph to please give a formal vote of thanks. Emmanuel?
Yes, I'm here. Thank you. Thank you very
Oh.
much. Yeah. So good evening, everyone. As we come to this close of this today's insightful session on the future of banking and financial services, I take this opportunity to express my heartfelt gratitude on behalf of Higher Education Forum and ISTD Navi Mumbai and Islampur chapter. Our sincere thanks to our esteemed speaker, Dr. Narendra, former CMD of Indian Overseas Bank, for sharing his valuable insights and practical perspectives on the changing dynamics of the banking and financial sector. So your session was truly enlightening and left us with much more to reflect and explore in this system. And we thank you, all the participants, for coming here and being part of this webinar, so that many people may have gone through a lot of struggles in the financial sectors. And I think many of the questions were been answered, which was very much related to our day-to-day life. So thank you once again, everyone, and wishing you a great evening ahead.
So on behalf of, personally, I am grateful to Professor Sen Gupta ji, Mr. Kannan, and all my friends here, seniors, and all of you for your good gesture in inviting me. And whatever limited or whatever, in a way, I have been able to speak. Hope you appreciate it. And I look forward a long relation with the Professor Sen Gupta and all your organizations. Thank you.
Thank you, sir. Thank you.
Thank you.
Thank you very much, sir.
Thank you. Thank you, sir. Thank you.